And welcome to the show. I'm glad to have you guys here on this Tuesday, April 11th, 2023. Now, listen, guys, in order for the YouTube algorithm to notice me, I need you guys to push the like button. So if you're out there listening to my channel right now, don't waste any time. Just push that like button. I really appreciate it, and that'll help the algorithm to notice me on this channel. And so we can get things moving. So let's get right in there right now, and let's take a look at what's happening. We are setting up for one heck of a crisis right now. And it's when the crisis really gets going, we are going to see scenes like this developing. Cities across America, cities across Canada, cities across the United Kingdom. It says Baltimore mayor calls for citywide curfew after all hell breaks out. It's just mayhem in the streets. I'll just click this for a second. Hear that? That's what we're going to be seeing. City after city after city. And in fact, homelessness is going to increase something desperate. And we're right on the edge of this banking crisis morphing into something much bigger coming right up. Everything that I'm seeing on the charts right now and things that are happening out there has got a greater intensity than 2008. We have to go back into the 1930s to see anything even close to try to understand what's going to happen next, guys. And this is really serious. Take a look here. United Kingdom housing market is in chaos as banks are pulling mortgage offers, and homeowners are selling up because they can't afford repayments. First-time buyers must prove they can afford 7% interest rates as £58,000 could be wiped off the average home. So they're already in it. This is the front edge of this thing. This is a monster. The mortgage crisis in 2008 in the United States is not going to be parallel to this thing. I'm telling you right now, what's brewing right now is we've never seen anything like it before. Commercial real estate is headed for a crisis, worse than 2008, Morgan Stanley analysts say. So what's happening out there is these office spaces are not being used and stuff. Now, the banks have a margin. And what we've been doing just in the last little while is things, but prices and stuff are starting to drop, but it hasn't fell below their margin. We don't know exactly what their margin's going to be, but I can tell you right now, right up front, if commercial real estate prices drop more than, say, 30-40%, it's going to fall well below their margins. And what's going to happen at that point in time is they're going to walk away from these mortgages, leaving the banks holding the bag. You know? And so the leases, it's just not going to keep up. And we're on the front edge of this thing. It hasn't happened quite yet. And a lot of this stuff that's just beginning right now, we're on the front edge right now. And yeah, we had a little banking crisis that occurred. Okay? And the Fed's come along and they've opened up their window and they've lent a lot of money. $400 billion has been lent into the system. And as smooth as first, this is like when the ground starts to shake, and the volcano puffs that little puff of smoke, and then everybody gets alarmed, and then everything goes back quiet again. You've been warned. If you stay near that volcano, maybe a week later, it might be a month later, but it's going to be a Mount Vesuvius, and you're going to be Pompeii. This is what we're talking about here. And so this is why I'm saying we're on the front edge of this thing. It hasn't really begun yet, but it's going to be bad, guys. It's going to be bad. And now, also what I've been seeing is mainstream is starting to carry the story that I've been carrying on this channel for 7 years now. People have, 3, 4, 5 years ago, people were ridiculing and saying, "Hey, Glenn, come on. You know? But now mainstream's starting to carry what I've been saying. They're starting to speak and say the things repeating the things I've been saying for 7 years. They're just starting to carry it now. The main channels. And you'll see these headlines like, United States dollar in trouble. China is whatever. The BRICS. You're starting to see it in the mainstream now. They're starting to catch on. It's taken them long enough. I mean, I was here 7 years ago telling you guys this. But I saw it coming in advance. And now I'm telling you guys something else. I'm going to tell you right now I see coming in advance. And I've been telling you guys actually for a couple of years. But I'm going to reinforce and tell you guys again. Right now, you got a lot of homeless people out there. And a good chunk of those homeless people out there, are people who have substance abuse problems. And oftentimes, this is what causes them to be homeless. But this is not going to be the way. Because of what's happening right now, we're going to see a tenfold increase in homelessness. And we're not talking about substance abuse people. We're talking about what's been average citizens out there who are just going to fall below the poverty line now and not going to be able to afford to stay in their homes. And it's going to be a tragedy. It's up and coming, And I heard, I don't know if it's true or not, but I heard that the business owners are allowed to discriminate against homeless people. That's what I heard. Is that true? When is discrimination okay? I'm just asking questions here. Okay. One of the things we want to look at now is the price of silver today. Now, this train has not left the station yet. Because I'm going to tell you, with all these problems coming, guys, they're so big, these problems are too big to fail. The problems, when you compound them together and put them all together, the commercial real estate crisis, the banking crisis, and also the dollar crisis, the dollar losing value, you got your inflationary problems, all these problems in the economy. When you put them all together, it creates a situation that is too big to fail. And what that means is there's a lot of talk out there. Like, people will say, hey, you know what? The Fed's just not going to be able to solve this. It's just too big. But on the other side of that coin, it's too big to fail. Because if it does fail, it would just completely destroy our civilization practically. It can't fail. They can't let it fail. So what does that mean? Now, I've been preaching this for a long time on my channel, what it actually means. It means that they will not let it fail. They can't let it fail. So what does that mean? It means that they're going to have to use money, or what we call money, or which is credit, which is just basically Federal Reserve notes. They're going to have to use those as an effective tool to keep it from failing. But ultimately it's going to fail because it's the dollar that they're going to take down. The dollar's going to fail. And when the dollar fails, then the system will fail. But it's by default. It's not because they let it fail. It's because they couldn't let it fail. And they destroyed the dollar. And then the destruction of the dollar is going to fail the system. So we are right now in a failing system. And this, my friends, ladies and gentlemen, is math. This cannot be changed. Now, there's a lot of crises out there. There's a war crisis that could happen. There's a lot of other crises that could happen, but maybe they won't happen. If cooler heads prevail, the war crisis might settle down and go away, and other crises might settle down. But this is a crisis that will not go away because it's hard math. It's hard math. It will not go away. It's going to fail. And you have to prepare for that. But the question mark is how long is all this going to take? And as this fails, they're going to go back to hard money. They have to. They're going to be forced. They're going to be kicking and screaming, but they're going to have to go back to hard money in the end. Now, China, Russia, and the BRICS nations, South Africa, and so on, they already realize this, and they're already making the transition back over to hard money. The Chinese central bank, they're the biggest buyers of gold out there. Smart. They already see the handwriting on the wall. They already understand that it's math. But over here in the West, our politicians, they're like a bunch of ostriches with their heads in the sand. And they're not going to make that transition until they're forced to make that transition. And by that time, what they're going to do to all of us. Okay, so silver's up 12 cents today, guys. Taking a look at gold today. We're looking at a gold price of $10.60 up at 2002. So it's now, before we were running up and we were touching the $2,000 mark. And then backing away again, back into the 1900s. Now we've successfully pierced the $2,000 mark. And we're keeping our heads above that area. You know, so we're riding higher in the water with gold and silver. And the train hasn't really left the station yet. These are still way below, way undervalued, gold and silver. And so the train hasn't really left the station, guys, for this. Now, the choo-choo train on the cryptos is starting to leave the station a little bit quicker. We're looking at Bitcoin. Took a nice little pop in price. 30,068 for Bitcoin. Ethereum is at 1,910, and the prices are rising right now on cryptos. Let's take a look now at the Dow Jones Industrial Average, which is up 57 points today, 33,644. Big question mark here is, will the equity market fall? It's a hard question to answer, and I know there's a lot of people out there saying that it's going to crash 90%, 80%, whatever. But you have to understand, in a hyperinflationary system, the best performing stock markets in the world are hyperinflating stock markets when the currency is hyperinflating. But it's not like you're making a lot of money off the market, because the value of your currency is dropping quicker possibly than the market's going up. Simply put. Taking a look at crude oil today, $80.67. And crude oil's up 93 cents on the day. We've been consistently staying over $80 now. Taking a look at bonds and rates today, and we're seeing climbing yields today. We're looking at a U.S. 10-year at 3.44. It's up 2.8 basis points. Listen, guys, have you pushed the like button yet? Come on, get on there. Push that like button. Okay. U.S. 30-year is at 3.64. It's up 1.7 basis points. And finishing off, the U.S. dollar index is at 102.15. And listen, I appreciate you guys' comments out there too. Comments helps my YouTube algorithm as well. So, even if just say hi. Hi, Glenn. I'll say hi back. Thank you guys for listening to my show. You guys have a great rest of the day, and we'll catch you guys in the next episode. Bye-bye.